How should we handle stocks for the upcoming reverse carry trade? Should we reduce exposure in the 401? I heard you say it takes 10 years to get back from today's PE ratios. So I don't know where you invested at. The statistic that I was pointing to is if you are investing at the current PE ratios of 23, 24, 25, which are very high PE ratios. If you invest right now, it takes you 10 years. Over the next 10 years, you will lose an average of 2%. It's not very good, right? Now, you probably bought in 2000 or 2001, where you've continued to dollar cost average the whole time up in your 401k, and maybe you get a match from your company. That's great. I can't tell you what to do. I'm not your financial advisor. I would go talk to your financial advisor and talk about the reverse carry trade with them or your company and say, hey, I don't know what you guys' least risky portfolio is, but I'm feeling like, the stock market's a bit overvalued. And so if I'm higher up on the risk curve in the portfolios that you have me allocated to, I'd like to reduce my exposure to, whatever the least risky portfolio you have is. And then they will move you to more of a bonds and mutual funds type portfolio, which still has a little risk to it. The mutual funds will obviously be holding stocks and other securities, but they're going to be much more diversified. And the bonds should perform well when all this happens. Michael Gayad, another great count over there on Twitter. He has believed that treasuries are going to be the big winner for a long time. And his hedge fund is actually built on an algorithm where that's the outcome that he sees happening. So you do have a significant exposure in your 401k to traditional stocks. I would have the conversation with whoever is managing that. And if you want to de-risk, I think based on where things are at, it makes a lot of sense historically.